access to capital, understanding your financials, being able to read them, creating financial projections if you're looking to grow and you need financing, or you're looking to start a business and need financing. And lastly, with understanding your personal and your business credit. We also provide most other business-related assistance, including growth plans, international trade, technology, and government contracting. Our SBDCs are found in all 50 states, as well as Washington, D.C., Puerto Rico, and U.S. territories. The existing partnership with the U.S. Small Business Administration, again, the acronym of SBA, I'm sure most of us have heard of the SBA. And also, and we most often partner with a local college or university. Our partner institution is the University of Missouri, Columbia. And the purpose of this partnership is to help foster small businesses and job creation and or retention by providing educational resources such as what we're offering today, and business consulting services, as I mentioned above, to existing business owners looking to grow or triage their businesses. Yes, we do assist businesses that are having some trouble, as well as those that are looking to start a business. The impact of SBDCs on the economy is large, and we are a pretty small organization. But what we have been able to do is assist in the creation, and this is collectively, this is nationwide, we have been able to assist in the creation of a new job being created every 5.3 minutes, a new business start every 32 minutes, and $100,000 of financing being received every 9.4 minutes. This equates to almost 100,000 new jobs created, billions of dollars of capitalization, and well over 15,000 new business starts in our most recent fiscal year. I share all of this to say there are resources available in your backyard to assist you as you prepare for the opportunities we are going to discuss today. The webinar is an overview of the programs, and it is not an endorsement on our part of any program or organization that we discuss today. And I also want you to remember that we have a very diverse audience that we are delivering this to today. So not all of the programs we discuss will meet your direct needs, but our hope is that some or most will. So be looking for those programs or organizations that we discuss that work best for your particular situation and need. We have you all on mute during the duration of the webinar, and I'm sure anybody that has been on a recent webinar knows why we do this, so we don't have all of the noise in the background and the distraction. But we do want to hear from you, and we do want to entertain your questions. So please put all of your questions in the Q&A at the bottom of the screen, and we will answer as many questions as we can during the Q&A at the end of the webinar. Today, your presenters will be myself, Erica Henderson, and Kevin Wilson, who will introduce themselves.
Good morning, everybody. I'm Kevin Wilson. I'm a part of the America's SBDC. The organization I'm actually part of is the Small Business Empwerment Center, and a proud member of the SBDC network. Right now, our other co-host, Erica Henderson, is not with us just yet, but she should be joining us as soon as she gets off of another webinar. So with that, we will move on to our next slide on getting ready for a loan.
All right, so I guess I will take over again here. So basically, what is required to get ready for a loan? And these are the things that are required for a loan, but these should be things that you should have in place for your business anyway. These are things that to have a sound business with a sound back office, you need to have readily available for your business. So the first thing is a business plan. I've heard so many times, oh, business plans aren't necessary. You know what? If you need money from a traditional lender, they're going to be required. Business plans are still required, and they are still very relevant for helping you as you strategically manage your business. Personal credit report. We hear all the time, why do they need my personal credit report? Because you know what? You are the business in most cases, and until you've really been able to develop a business credit history, which most of us have not, everything will be based upon your personal credit report. Collateral. the SBA, if you're going after an SBA, the thing that they talk about all the time is all available collateral, right, Kevin? They
That is
say
correct.
all
Absolutely.
available collateral. So be prepared. A lot of people have, some of our small businesses have issues with providing collateral, but you have to think about it. Banks are risk averse. We're going to talk about more than banks today, but everybody that is investing in your business wants to make sure that you have skin in the game and you too believe in your business. Financial statements. This could be personal financial statements where you outline your personal, what money you have coming in and what money you have coming out, what assets you have, etc., as well as the financial statements for your business, which include an income statement or profit and loss statement and a balance sheet. And some will even want cash flow statements. If you are already in business, of course, they are going to want historical. If you are starting a business, they are going to want pro formas or projected financial statements. And for most nonprofits, they're going to want those financial statements to be audited. Income taxes, this would be make sure that you are up to date on paying your taxes and make sure you have copies of at least your last 3 years of income taxes. Any legal documents, any contracts, anything that would make your loan stronger, make sure you have those available. For those that are already in business, a listing of your accounts receivable and payables, how many days they're out, what your terms are. They are going to want to know those things. If you have any business leases, any equipment leases, anything of that nature, they're going to want to know your borrowing history. If you have any loans outstanding, what your payments are, what the terms are, that information you should have readily available, and your resumes of any key members of the business and the purpose of the resume is really to help the lender get comfortable that you are indeed the right person managing this business and you have the capacity to not only manage the business, but to make sure they get their money back. This is all about making sure people are comfortable lending you money as you get ready for the loan.
Thank you.
Kevin.
Thank you so much, Lynette. And I am remiss. We do have 2 of our other team members on the webinar. Also, Leroyce Gaines, who keeps us all organized and is our training coordinator, and then Ed Leyu, who is our technology counselor for the St. Louis region. So thank you both for being here also.
Thank you.
You're welcome. All right, so we'll start in with some of the, one of the more familiar SBA loans, which is the SBA 504 loan program. The SBA 504 program is a long-term fixed rate financing for for-profit businesses, right? So this is not one of the programs that nonprofits can apply for. But this one is strictly for for-profit businesses. And once again, it provides long-term fixed rate financing for real estate, buildings, machinery, and equipment. A few of us on the webinar today are recovering loan officers, and I'm one of those recovering loan officers and used to do some underwriting for SBA 504 loans. We used to refer to this as the big bricks and sticks program. And so really great rates right now. I believe SBA has a 20 to 25-year interest rate for 2 and 2.25 up to about 2 and 2.25 fixed. So it is a great program in terms of helping small businesses who are ready to do an investment in real estate for their business. You have to occupy 90% of that real estate with your business. Very little of that could be leased, and it can only be leased. Any of that real estate can be leased only by approval by the SBA and the CDC. I think it's important to note also for businesses located in the opportunity zones, which are also in the city and county of St. Louis, the job creation or job retention requirements are more relaxed. And so the requirement to create or preserve one job for every 85,000 that's guaranteed by the SBA, as compared to 75,000 per job created or preserved outside of the opportunity zone. So once again, this is the SBA 504 is a great program to incentivize banks to do long-term lending in your business. There's a 50-40-10 split typically with a 504. A bank is going to do 50% of that deal. SBA will come in at 40% of that deal, and then which leaves a 10% equity injection for the borrower. So we were talking about $1 million project. The bank is going to do 500,000. SBA on the 504 would do 400,000, and it would be a $100,000 equity injection from you, the borrower. Lynette had mentioned earlier on getting ready for a loan. It is always, even with the 504, there has to be some skin in the game on the deal. Okay, so that 10% is your skin in the game. We'll move on to another SBA loan, which is the Community Advantage Loan Program. Now, this falls under the standard SBA 7A umbrella. 7A loans are what most people typically are going after when they think about going after an SBA loan. So when you're going to the bank, you are typically asking the bank to take your application for your small business. A 7A loan can be used for a startup or existing business. I would say the majority of 7As are done for existing businesses. And there's a 75% guarantee on that loan for the bank by the SBA. So in a way, the SBA is guaranteeing for the bank 75% or 85% of the loan on your behalf, right? So once again, it is an incentive for banks to do deals with small business owners, right? Here we're talking about the Community Advantage Loan Pilot Program that during COVID-19 and this pandemic, this expands access to capital for small business owners, particularly those in underserved markets, whether those urban communities or rural communities. Community Advantage allows mission-focused, community-based lenders to make 7A loans to small businesses with an SBA guarantee of 85% for loans of $150,000 or less, and 75% for loans greater than $150,000 and less than $250,000. For those businesses located in the Opportunity Zone, SBA has expanded the pilot program definition of underserved markets to include opportunity zones, right? And so Community Advantage lenders are required to make at least 60% of their loans in underserved markets. One of our local Community Advantage loan providers is the Justine Peterson Housing and Reinvestment Corporation. And we also work with the Lift Fund out of Texas to do deals here in St. Louis and Missouri. So after this webinar is over, we will be sending out an email with the slide deck and with some of the contact information on all of these programs and how you can go and apply. Moving on, we'll talk a little bit about the SBA microloan program. The microloan program has been around for years, and it provides loans up to $50,000. Now, this is usually for those really small businesses that are trying to start up. They're typically moving out of their home, or they are a home-based business, and they need some small amount of money to get started or to buy some equipment or working capital, things like that. The average microloan runs around like $13,000, goes up to about like $13,000. The SBA works with nonprofit organizations in the community to provide not only the microloan program, but also technical assistance for small business owners, right? And so investment rates vary depending on the intermediary lender and the cost of the intermediary lender from the U.S. Treasury. Generally, these rates will be somewhere between 8 and 13%. So this is a little bit more pricey money, but it is for those businesses that have some, really in the startup phase, and maybe you might have some credit issues too, but still no bankruptcies, things of that nature. Microloans can be used for working capital, inventory or supplies, furniture or fixtures, and machinery and equipment. Lynette, did I leave anything out on the microloan program or 7A that I should have mentioned? Okay, she's on mute, but
I'm sorry. I think you covered everything.
Fantastic. Okay, good. All right. So now we're going to start talking a little bit about some of the loan programs that are available to nonprofit organizations. Up to this point, we've talked about programs mostly for, or only for-profit businesses. So we'll go over a couple of programs that are for nonprofit organizations. Now, I like to also put the caveat is that typically the Small Business Development Center does not work with nonprofit organizations. However, during the pandemic, we have had a lot of phone calls from nonprofits who need some financing and things like that. And so we thought it might make some sense to talk a little bit about some of these options for nonprofit organizations. As Lynette also mentioned earlier in this webinar, is that all of these programs will not be applicable to everyone, right? The program we were about to talk about, the USDA Community Facility Program, really only applies to nonprofits in rural communities. So what does the USDA Community Facility Program do? This program provides affordable funding to develop essential community facilities in rural communities, right? And so an essential community facility is defined as a facility that provides an essential service to a local community for the orderly development of the community in primarily rural area and does not include private, commercial, or business undertakings. Eligible borrowers include public bodies, community-based nonprofit corporations, federally recognized tribes, and rural communities, right? So what kinds of funding is available? Low interest direct loans and grants, or a combination of both of them, right? And so USDA would be the body determining how much one organization might be able to be eligible for a grant or loan. Let's see here. I'm clicking too fast here. Also, one of the things I want to note is that you would want to apply for the USDA loan program through USDA, so usda.gov, and later on we will provide some information on that. But once again, this is for nonprofit organizations in rural communities. Sorry for everybody who is in a major city, okay? We'll also talk about one of our partners in the work that we do, IFF. They are what is referred to as a community development finance institution, and they do financing for nonprofit organizations. They saw an immense need to help nonprofit corporations own and improve their homes. So they started out on home finance for nonprofits who are developing homes and things like that. Nonprofits continue to evolve as they focus on some of the nation's most urgent challenges: healthcare, education, and affordable supportive housing. IFF also addresses the need for access to fresh and healthy food, community integrated housing for people with disabilities, accessible early childhood education and care, and sustainable communities. Through their CDFI, they collaborate with a lot of neighborhood community organizations, local governments, and community developers to create opportunities again and again for their customers. They offer facility loans, facility improvement loans, and equipment and vehicle loans for nonprofits throughout the Midwest. IFF started in Illinois and now has started doing loans in a lot of different areas, a lot of different states, Missouri being one of them. So IFS also finances full service grocery stores in food deserts and affordable housing near public transit. Charter schools, housing, and energy efficient initiatives benefit from special financing programs. So the types of loans that IFF does through their CDFI, once again, are facility loans for needs including real estate acquisition, renovation, construction and repairs, maintenance, and facility improvements, leasehold improvements, and refinancing to expand programming or other uses of this kind of financing. They also do equipment and vehicle loans for needs ranging from computers and furnishing to medical equipment and service-oriented vehicles. Affordable housing loans for pre-development, construction, and permanent financing of affordable rental housing. And you have to complete an application for them. Grocery store loans, once again, they're doing healthy food financing initiatives through Illinois and Missouri for food deserts. So a great program in terms of that. The IFF typical terms and rates for human services, they'll do 15-year term with a 15-year amortization. The rate will be reset every 5 years. They'll also look at nonprofit organizations that have a campaign, a capital campaign. They'll do an interim loan, 36-month interest only. They do want to see the pledges to cash analysis. So you can't, if you've got a campaign, you've got to be able to let them see those pledges and be able to contact the people who've made those pledges. So you'll need to let them have access to the donor name list, and you'll also need a secondary source of repayment, okay? Also, I think it'd be important to talk a little bit about the Missouri Department of Economic Development's Nonprofit Relief and Recovery Program. Now, I believe that the deadline for this is at the end of this month, and so you have a few more days to apply. But this nonprofit relief, now this is not a loan, so this is actually a grant, and you would apply for this at www.ded.mo.gov. So this nonprofit relief and recovery grant supports Missouri nonprofit organizations in meeting critical and emergent needs resulting from COVID-19 public health emergency and in building organizational capacity for recovery from the current emergency. I know based on the list that I saw of some of our attendees, some of our attendees today are from Illinois. I apologize, this program is only for the state of Missouri. The state of Missouri will make available $22 million in grant funds through the CARES Act for eligible Missouri nonprofits directly impacted by the public health emergency. With priority.
I hate to stop you. I'm sorry for interrupting, but Illinois does have a program as well, okay, where they provide grants for small businesses. I will try to, while you're talking, I'll try to find information on that so we can send it out. But I did see it on the news last week.
Oh, wonderful, wonderful. So for those who had, kind of kicked to the curb just a minute ago from Illinois, there is an option for you also. So Lynette is going to try to find that, and that would be in the Q&A section there in a little bit. But once again, $22 million in grant funds through the CARES Act for eligible Missouri nonprofits directly impacted by the public health emergency, with priority given to those serving at-risk populations in the areas of homelessness prevention, job training, food insecurity and basic needs, at-risk youth services, child care, and academic/educational support. The grant will allow nonprofits to continue providing community safety nets that improve quality life and lead to economic and community sustainability. Once again, you would apply for this program at www.ded.mo.gov. Really great program. Hopefully that would be a great program for a lot of the nonprofits on here. I do know that you need to have be registered with sam.gov. You also need to be registered with everify.gov to be eligible for, or to be able to apply for this program. So once again, take a look at sam.gov and everify.gov to make sure that you're ready before you apply. And it might take a few days for you to get through SAM and sam.gov and for E-Verify. If you do need assistance with that, our Procurement Technical Assistance Center can help organizations that are trying to work their way through sam.gov and E-Verify. And we'll also send out some of that information later on. Finally, I wanted to talk a little bit about the Empwerment Zone wage tax credit. My organization has been charged with marketing and helping small businesses take a look at the Empwerment Zone wage tax credit. In general area, this is applicable for East St. Louis, North St. Louis in the city, and Wellston as the general borders for this tax credit. This tax credit originates out of HUD, and this new law allows for renewal of the federal empowerment zones, which initially expired in 2017, but they've extended the tax credit. And this tax credit is a wage tax credit up to $3,000 for employees who both live and work in the empowerment zone. This credit can be taken annually with no pre-certification requirement for the employees. So you want to make sure that you want to go to the HUD website and look on the empowerment zone map to see if, number one, your business is in the empowerment zone, and number two, whether your employee is in the empowerment zone. So that employee must live and work in the empowerment zone, and you can get a $3,000 tax credit on that employee. Also, you'll use Form 8844 to claim the empowerment zone employment tax credit. For the tax year, the credit is 20% of the employer's qualified zone wages up to $15,000 paid or incurred during the calendar year for services performed by an employee while the employee is a qualified zone employee. Partnerships and S corporations must file this form to claim the credit. All others are generally not required to complete or file this form if their only source for this credit is a partnership, S corp, estate, trust, or cooperative. Instead, they can report this credit directly on Form 3800 General Business Credit, and the following exceptions apply. If you are an estate or trust, and the source credit can be allocated for beneficiaries. So once again, this is a tax credit, $3,000 per employee for anyone that lives and works in the empowerment zone. Fantastic opportunity. And if you have questions on that, feel free to reach out to us and we will take care of those questions as it pertains to the empowerment zone tax credit for wages. All right. We wanted to leave enough time to answer some questions. And so, Lynette, if you wanted to start reading off some of the questions, and we can see what we can do to answer some of those for some of our participants. Once again,
we have basically answered all of the questions, Kevin. I will. Great. We got a lot of hellos, so hello back.
Hello to everybody. Thank you so much for being here. This is great. So typically we get some hard questions on these finance webinars, but no questions.
I'm going to go through the ones that we have.
Okay.
But again, they were very easy. Someone asked where our location was in St. Louis. We have several physical locations. We have an office in at the T-Rex. We have two offices. Kevin and I are located in, and Amina are located at the T-Rex. Leroy's is located in Ferguson. Ed will be located somewhere. We don't know where that is yet, but he will be have a physical location. We have locations at the St. Louis County EDP, and we also have location in St. Charles County, and we have a satellite office in Jefferson County. So we are pretty much everywhere. However, right now we are literally everywhere because we are working virtually, and we don't know how long we'll be working virtually, but we are still scheduling counseling sessions and we are still doing training. It is just all done virtually now.
Wonderful.
Okay, somebody said they missed the beginning, and I let them know that we are going to send a copy of the presentation. So
And we are also recording the webinar also.
Another person asked if we provided guidance to build a loan lending package, seed investment, new market grants, new market tax credits and loans based on St. Louis job creation. I responded that yes, some of our counselors have experience with this, but due to the complexity of these projects and the dollar amount required of these projects to make these deals work, we accept these types of client on a case-by-case basis, but we also refer to other resources depending on the project. Would you like to add anything to that, Kevin?
Oh, I think you answered that real well. Definitely we'll take a look at anything, and once we get to Lynette's point, based on the complexity of the deal and whether we can count it towards the work that we do, we'll definitely take a look at those kind of projects.
And then someone asked if the Illinois funding I was looking for, was it geared to nonprofits at all? Because I stated just small businesses and regarding capital campaign. I shared what I found, and I will share that when we send the email. And it is in the Q&A, anybody can see it, but I did find a link. I think it is basically for small businesses. I did not look for nonprofits, but I know for capital campaign, no, what I was meaning to say was, I would go and look and see if there was anything pertaining to nonprofits. I just haven't had a chance to do that. So it looks like we have 10 more questions, Kevin, that came in after.
All right.
Someone asked if we had office space for rent, and my response was going to be, I was working on it, that our St. Louis County SBDC oversees the St. Louis County incubators. They have location in Wellston, Chesterfield, and Kevin, you're the chair of the board. What am I missing?
So
Helix?
The Helix, which is in St. Louis County, near
Creve
Coeur.
Yeah, somewhere out there.
That's Creve Coeur.
Yeah, Creve Coeur and
Lindbergh and Olive.
Yep.
Yeah, by Monsanto, right?
That is correct.
Yes, that's correct.
And they would contact Colleen Mulvihill.
Yeah, that's what I have, and I'll provide her number in the email that I send.
Fantastic.
The next question is, I am currently in the process of opening a cosmetology school and wanted to know what loans I would best qualify for. I will start answering that, and Kevin, you can chime in. Again, a lot of this is dependent upon case-by-case situation. It depends, number one, on how much you need. If you need less than $50,000, a microloan might be perfect for you. If you need more than that, then we would look at a traditional 7A. I think, Kevin, you put up the Community Advantage.
Yes, Community Advantage. I think that might work if it's for profit also.
Right, if it's a for-profit business. So anything else you might want to add, Kevin?
I think everything we've mentioned is if it is a for-profit school. I think if it's a nonprofit, I'm not sure that any of the programs we've talked about would be applicable.
The next question is, do you have any information on VA small business loans or loans for disabled vets?
So I think the SBA 7A through your typical lender, whether a bank or even the Community Advantage lender, would look at a SBA loan. I think disabled veterans are one of those underserved communities that they look for in Community Advantage and the microloan program.
All righty. Ashley, let's see. I have a building and need funding for build out. I have a building and need most funding for build out. That would probably be a 504, huh, Kevin?
I would think a 504 and maybe even a 7A would work. But once again, like Lynette had mentioned, make sure you have that list of all of the documents that are needed that she talked about at the beginning of this webinar. And then that'll make it way easier for any lender to take a look at the deal.
All right. Marlon asked, how long is the application process typically? I personally think that I would apply for an SBA microloan program.
I tend to think that the microloan program process is usually about a month to a month and a half, usually. What do you think, Lynette?
Yeah, it depends on the lender. But it's not as long as the 7A or the 5, or certainly the 504. It's a shorter process.
I usually say with 7A or 504, be prepared for a 3 to 4 month process on going through from beginning to end. With microloans, since it's a smaller amount, I think it's usually about a month and a half, something like that. I've seen them.
Yeah, it's usually the
shorter.
turnaround time is usually quicker.
Yeah.
Does your nonprofit have to exist already to qualify for loans and credits, or can I start one this year and apply for various programs?
So I think for all of the programs we've talked about today, you need to be an existing nonprofit with, for lack of a better term, some maturity. You've got to have, at least, a year or two of financial statements showing some level of cash flow and being able to repay the debt. I guess the only exception I would say is that if you had a capital campaign and you had donors lined up that had commitments, that might be the exception. What do you think, Lynette?
Yes.
Okay.
I think you nailed it on the head. How do we get a copy of the recording? We will include the link when we send the presentation. Is that correct?
Yes.
Leroy, isn't that how we do it?
Yes, that is. Once
Okay.
we send out the surveys, then I send out the recording with the link, or the message with the link to the recording.
Okay, great.
Awesome.
What are the typical requirements for a microloan when a business is in the pre-established phase? I guess that is in the startup phase.
Mm-hmm. So
you want me to take that, or you want to take that?
Oh, you can take it if you like.
I was gonna say you go ahead and take
Okay,
it. You've been doing
I'll take it. So in the pre-phase, so we definitely, I think with most micro lenders, they want to make sure that the borrower has some experience in the field that they're working in. So if you are, you want to open up a restaurant, what kind of restaurant experience do you have? And they want some well thought out business plan to kind of show that you kind of thought it through. Great thing is that the SBDC also provides business planning classes. And so you go to our website, Missouri SBDC.org, and you can find some of our upcoming business planning classes and how to start a business also. But definitely want to make sure that you have some experience in that space. And this is not just a whim, but you've really done some things in that space already.
I want to include, you do have to have a decent credit score. So know what your credit score looks like. And if you have dings and you have problems and you've had some problems in the past, be prepared to explain it away, and be prepared to let whoever the lender is know why that is not a problem now going forward. And you also need to have well thought out financial projections. They need to make sense. You can't say, I think I'm going to do $2 million my first year of operations, unless you can prove that you can do $2 million of sales your first year of operation. So they really need to make sense, and they need to be aligned with the industry. And as Kevin said, these are things that we can all help you with.
Mhm.
prior to reaching out to a microlender. So the next was, could you give contact information? We will include contact information, and I think it's at the end of the presentation. If not, we will make sure we include our contact information as well as the contact information for the loan programs that we have discussed. Matthew thanks us for the presentation. Matthew, we thank you for being here. And Vanessa so nicely helped us with the incubators.
Thank you, Vanessa.
Yes, Wellston. We got Wellston and Helix, but we forgot Lee May, Kevin. So Lee May is also an incubator location, and Chesterfield.
They're gonna kick
And
me
then
off the board.
Eric asked, let's see if I go back to his question. Does your number, okay. And he said, that question was as it relates to pandemic related programs. And I think the answer would still be the same.
Mhm.
As it is for profit in Florissant. Okay, Ashley, so you should qualify since it's for profit in the county. And then I have 7 acres in St. Louis County and would like to develop 28 affordable houses. Can I get access to capital to help with this project?
So I think that is one of those IFF projects. But once again,
Yes, certainly.
Go back to that list that Lynette had mentioned. You need a well thought out plan or strategic plan, development plan for that, audited financials, things like that. And they would definitely be interested in looking at any kind of affordable housing project that would help low to moderate income individuals.
Okay. Let's see. If you are on a payment plan for previous business tax issues, are you eligible for any of these products?
So if you're on a payment plan with the IRS, maybe, but definitely when any of these lenders or any of these programs reach out to the IRS, if you are in any way delinquent, that would probably be an automatic no, I think.
Anything that is federally
If anything's
related
federally,
right. And even we found that issue in the city and with the county as well, if your state taxes weren't paid as well.
Right. So even with the grants from the state and whatever, if you owe taxes to the state, it's doubtful that the state would provide grant lending for you. So same thing with any municipality, as Lynette had mentioned.
I live in Illinois and I want to start up a childcare business. Are there counselors that can walk us through the entire process and give us step-by-step instructions on applying for a microloan or SBA loan? This might be an IFF loan as well, Kevin. I'll let you respond to that.
So if it's a child care, I guess if it's a nonprofit child care, well, I guess it could be a for-profit child care
It
too.
can with IFF.
With the IFF. But yes, so definitely, we would, the Small Business Development Center would help you with that. If you were looking for SBA microloan, I think the same process would apply, is that you do need a business plan, well thought out projections, things like that. You do need to collect your tax returns personally, and then I think the microloan program would take a look at the deal.
All right. Kevin, as prior underwriter, could leased assets, open contracts, RFPs, letters of intent, or promissory notes be considered collateral?
So I'm taking off my good guy SBDC hat and putting on my evil small business loan hat here. So no, I'm just kidding. So I would say from a lending perspective, the things that you brought up are really like collateral and would be very hard to secure a loan for, and a loan with. I would think that, maybe contracts that were approved, that a lender would see potential cash flow through could possibly be used. I know lenders have used contracts in the past as long as they were able to have those payments sent directly to the lender first, and then they would take their cut, and then to pay off the loan, and then the rest would be given to the given back to the organization that had won that contract or whatever. So basically a dual check type of situation. But I think that is some really light collateral, but we're happy to. I'm putting back on my SBDC good guy hat, and we are happy to take a look at what you're talking about and tell you what we think typical lenders would say on that.
All right, thanks, Kevin. And I have a small pharmaceutical research company. Which loan should I apply to continue our product development? I think that would be.
I think that's a good one for Ed, don't you think?
That's what I'm saying. Ed, you want to chime in?
If you can, okay, you guys hear me now. If your product development ties to research that the federal government, one of the agencies, ideally probably NIH, National Institute of Health, they could actually fund some of that research. So it really varies. I would suggest reach out to me and we can talk more about it.
And we will include Ed's contact information in the information. So Ed's
Ed, thank you
information
for being here.
Included.
You were a lifesaver.
Yeah.
I'm glad you were here, Ed. That was our very, very, very last question. There are a couple of questions I got. I got a question that it was more personal. I will respond to you individually. And that is all of our questions, Kevin. So I guess we can wrap it up.
Fantastic. So as Lynette had mentioned, here's our contact information. You can find all of the Missouri SBDC's contact information, no matter where you're located. I know we have some participants throughout the state of Missouri. Thank you for logging on and being part of our presentation today. But you can find all of our information at MissouriSBA.org. And then you can also email us at info@stlewisSBEC.org, or you can give us a phone call at 314-405-8400. This presentation was paid for in part by the University of Missouri and the Small Business Administration. And so just want to thank you all for being participants today. We value your presence here, and we truly value your bravery to start and grow businesses here in the state of Missouri and Illinois. And I'd also like to just thank our presenters today and our ad hoc presenter, Ed. Thank you, Lynette, first of all. Thank you for being partner in crime here. Ed, thank you so much for the lifeline there. And Leroy, as always, thank you so much for coordinating and keeping us all moving in the right direction. So with that, I will end this webinar, and we look forward to seeing you guys on some of our upcoming webinars. Thank you so much, and have a great day.
All right. Thanks. Bye-bye.
Bye-bye. Thank you.